All right, hey everyone, Mark here, Mark P Markets. If you are reading my stuff on TradingView, how's everyone doing today? Thanks for joining me for another GreenBridge Investing market analysis. I can't even speak right today. So in this session, we're going to talk about what's going on with Bitcoin, the stock market, gold, the whole thing. I'm going to try to make that as quick as possible. Please share the markets or the stocks that you'd like to see in the chat now, so that when I get to the when I finish my portion of the analysis, I can take a look at the markets you want to see. And there's a lot of questions out there because the stock market's looking a little funky, but we're going to talk about that. Okay. All right. So with that said, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Also, if you're new to GreenBridge, hey, please register for the channel here so you get an email notification from YouTube when we stream. Plus, press the like button if you like the video. And check out our website at greenbridgeinvesting.com. All of our information is on if you click on Show More in the description portion of this video on the bottom, all of our links and all of our information is there. We have a 7-day free trial. We also have a free chat room and a free membership, so you can check all that out there and let me know if you have any questions. Okay, so let's get this going here. All right, first we're going to start out with Bitcoin. And I see some questions. Hey, Savi. Hey, Andre. All right, cool, thanks. So let's take a look at Bitcoin first, right? Now, here's the thing. So we have this, we had a buy signal that went off at 48.5. And now it's turning into a sell signal, right? We warned about this. It was a possibility. And we took out this yesterday's candle low at 48.168. So we're at 47.744. So that is a sell signal. Not only that, but it is a lower high that has been established off of a potential resistance area. So not exactly what we want to see for the swing trade. Now here's the thing. At this point, you have the choice. If you're in that swing trade, you have the choice to exit early and take the small loss, okay? Now, when we get into a trade, we determine our risk at the time of the trade, and we're willing to take that risk. If we're not willing to take the risk, then we shouldn't be taking the trade to begin with, right? So at this point, unless Andrew sends something out, we're just going to, step aside and just let this market play out, okay? And let the market decide the outcome. A lot of times, these things fake out both ways. So we have to see. I mean, this thing is going right back into that what is this, the 50, the 48, 45K support area. We're going right back into that area. So we're not going to overreact and rush out of it, or especially get short. We don't short this thing. So in this type of situation, if this candle closes like this, this could be just another clue that we're in the broader wave 4, okay? Because in wave 4 consolidations, obviously, you don't make new highs, and you could just kind of develop a range. And we have to see how this thing behaves, around this range low. If it goes there, back at the 43,000 area. So that's the story with Bitcoin, really. I mean, unless he sends something out, I'm not doing anything because I don't overreact to things, okay? But you have a choice. And some people may say, well, I don't want to take the chance. Okay. That's up to you, for people that are in that trade. You can always get back in, all right? So think of it that way if we get another signal to go long. And if this is a range-bound market, we are likely to get another signal somewhere back at the support area. So that's Bitcoin. Now, other coins, right? USD, Uni USD, look at this one. So I sent this one out as an alternate trade to Bitcoin. This thing went to 29.77 today, and the first target was $30. I don't know if anyone is in that, but whenever you have these situations where it's really close to the target and you happen to see it, it doesn't hurt to take that 1/3 of your position off the table. It just, we've been in this situation many times. So, I mean, even at this point, this thing is what, 27.86? Well, you gave a good portion back, but if you want to reduce risk in this situation, you still have that opportunity, okay? That's the thing with those. Other coins, right? Now, Uniswap has actually been acting relatively strong. Look at Litecoin. Following Bitcoin, right? Following Bitcoin. Same exact situation, and we have a lower high. What's another one that everyone seems to be getting all crazy about? Link, USD, same situation, right? Same situation. They don't trade on their own. You do get some exceptions here and there, like Uni, but this is all just one big Bitcoin trade. How about BAT, right? Basic attention token. This thing was getting all excited. Everyone was getting all excited. You're going to get rich with this one overnight. You're going to get rich if you just, put in a couple of $1,000 and it's going to go to $3 tomorrow. Not exactly. Now you got this bearish situation right here. This is a failed breakout if it closes like this. This is why you can't chase into these and why I don't like buying these type of breakouts, because now people, maybe they don't realize it or not, but they're caught. If they stay in this, you're caught. Okay, and this thing can pull all the way back to the middle of the range. I don't like getting caught in false breakouts. All right, so remember, Bitcoin is the leader and Bitcoin has a sell signal. So having hope with these right now, oh, I hope it comes back. Well, you're hoping against Bitcoin. So just a few coins I wanted to put out there. All right, let's take a look at the stock market real quick. All right, I'm going to start with the NASDAQ. Now, we had some questions in our chat room and about some stocks, Tesla in particular. Let's talk about this situation with the stock market first. So Chairman Powell spoke earlier today. Obviously, the market doesn't like exactly what he had to say. The NASDAQ's minus 199 points right now. It's on the low, what is it, 12,479. It made a low of 12,312. Okay, that's pretty significant because it took out this support level. And it looks like it's going to close below the support level significantly, right? That's the way it looks right now. So that's a change. That's an important change. It also puts this head and shoulders into effect, right? We have the left shoulder, the head over here, and the right shoulder. And now we can say it's an active pattern, okay? So in this situation, what do you do? Well, for one, this is why we were very careful with getting overexposed, because now there are a lot of people that are going to be overexposed who bought every single pullback, right, and bought whatever, thinking, oh yeah, right, it always goes higher. Well, the party may be over here. Now, so what do you do in this situation? First of all, turn off the news. That's the first thing you need to do, because the news is going to be over dramatic, and the news is going to stimulate a tendency for you to do the wrong thing at the wrong time. Okay, it's not their fault. That's just what they do, and that's how people react. It's just human nature. So that's the first thing you could do. And some people may say, well, how can you turn off the news? How will I know what's going on? Well, the chart will tell you what's going on. So in this situation, if you are long a bunch of stocks, especially if they're short-term oriented like swing trades, it wouldn't be a bad idea to reduce risk by taking something off the table. It's probably going to be a loss, but you know what? You're better off lightening up, okay? Now, here's the thing with this. Why am I not saying you should bang it all out? Because this location right here is a failed low location. It's not much lower than this low. What's this low here? 12,501 is this low back here. And we're not dramatically lower than that. I mean, again, the market right now is at 12.4. What is that? 12,470. So we're just fooling around, just below 12.5. So it's in an area where it can turn. It's a high probability turning point. Now, will it turn? Well, that's up to the market, okay? At this moment, it doesn't look like it's doing a very good job. Now, tomorrow is NFP, non-farm payrolls, at 8:30 a.m. Eastern time. Whether that there may be something in that report that gets the market happy again, okay, something like that. So that's something to keep in mind. And we can easily see a reversal, off of this area. So that's why I wouldn't go nuts unloading everything, okay? So it wouldn't be a bad idea to lighten up, maybe, shorten, or I should say, make your positions smaller. So if you have 100 shares or something, maybe bang out of like 20 shares, something like that, just to reduce it in case it keeps going lower, right? Reduce the risk. But what if it bounces? All right, and this is a place where we should be looking for a bounce, even though there's no sign just yet. This is not a place to be looking for shorts. This is the worst place you can be getting short. Okay, someone asked in the chat about buying puts. This is not the place to do it. The place to bought puts was up in here, okay? And I even had those UVXY calls, which I bought, 2 months ago basically, or a month and a half ago. I was right about the market pulling back, but I took a loss on those calls because there was so much working against me and I didn't buy enough time, right? I should have been buying June calls, but hey, whatever. I mean, UVXY is still fooling around. If I pull UVXY, it's fooling around. What UVXY is fooling? It's starting to perk up now at 9.95, but this stupid thing went to like $8, and I had the $12 call and the $15 call. I mean, this is a little bit of a perk, but it's still, you know, here's the S&P. It's still not enough to really get anywhere with, right? And I had to hold it for all that time. Not worth it. So anyway, I got out of those and just took a loss. But the point is, here, let's go back to the NASDAQ. The point is, in this situation, this is not a place to be looking for shorts, okay? This is a place to be looking for longs and to see, we may not get a long setup here, but it's a place to be looking for them and anticipating them while everyone else is busy buying puts and looking for shorts at the absolute wrong location. All right, so something to keep in mind. Now, it is possible that the market can keep going lower, but the thing to look for is that bounce. Yeah, it's right, DJ. And I'm gonna talk about Tesla right after this because that I saw that question. I wanted to address that, especially talking about this bounce. Here's what I'm looking for. I would like to see some sort of bounce, right? Even a minor bounce that can take us back into this area here. What is this? Around the maybe high 12s, maybe back to 12.7, 12.8. That was a support area. That's around this area right here. If we can get some kind of test of that, or maybe even the low 13s, if the market can give us that opportunity, that is your chance to get out of things that you're not too happy with, whether it's taking a small loss, a small profit, whatever it is, that would be the place to do it. That would also be a place to be looking for the next short, okay? Excuse me. At a resistance level, not support levels, at a resistance level. It's possible that we can get a resistance level around this area here, which is around what, the 12.6, no, I'm sorry, the 12, yeah, around 12.6, 12.7, right, around there, or even the 13 area. This would be the area to be looking for shorts, all right, that area there, if the market can provide that. So let's talk about Tesla. So that's the NASDAQ. The NASDAQ tends to be weaker right now. It's acting much weaker than the S&P. Look at the S&P. Look at this thing, right? This is really not that bad. We took out this low here of 37.88. We talked about this 37.80 area. We talked about that. Oh, I'm sorry, the 38.80, 38.50, 38 even. And here we are at a low of 37.23. Okay. Yeah, that's not great, right? But it's still in that failed low territory. And we have this area here, this 34, what is that? Sorry, 36.75 support that's nearby, all right? So this whole zone between 36.75 and where it is right now, there's a possibility we get a bounce there, all right? That's why I wouldn't get over dramatic. I would not overreact. There's no reason to unload everything. In fact, Andrew put out a couple of portfolio ideas today to add. This is the type of situation where you want to do stuff like that. As you take your small bites while everyone is basically overreacting to something that's not really that dramatic yet. Okay, I mean the S&P is minus 61 points. That's okay. That's a decent sell-off, but I don't see anything spectacular here. Okay, and I'd be looking for longs until we take out this support here, right? 36.64. Then the story changes a bit, right? I would stop with the longs. And let the market settle at that point. But so we have to see how tomorrow plays out in these things. All right, let's take a look at. Let's go back to. All right, so Tesla. Right. I just want to address Tesla real quick in this because Michael had asked about it in the chat room, and maybe he'll check out this video. And his question was, you know, he's got 5% of it in his portfolio, and his question is, should he get out of it and take the loss and look to get back in? Or what, right? So here's the thing with something like this. Look at the location. So this is where, you know, it's a tough hold. The thing is at 614, you're at a pretty decent area to buy. The 600 support is coming up. If the market bounces, this thing will likely bounce, right? So, I mean, if it was my position, I would give it a chance. I mean, you're in something that's generally a well-received stock and is likely to at least pop up a bit, even if it goes back to like maybe into the low sevens or something like that. That's your opportunity to really reduce your exposure in something like that, not these prices. If anything, these prices are a place to buy shares if you don't own any, right? That's what you have to think. I know it's hard to do when you're holding the shares and you're watching them just go lower and lower and lower, but this is, this is what gets people out of good stocks, because they're like, oh, this market's going to go to zero. And now you're banging out at the worst prices. So yes, there's no buy signal here right now. And sure, it can go lower if the market goes lower tomorrow. But just keep that in mind. I mean, one thing you can consider too is maybe instead of getting out of the whole position, reduce the position, right? So however many shares that 5% is, let's just say it's 100 shares, okay? Cut off maybe 40 shares. Just take a loss. You're going to take a loss on some of it, but be prepared to buy them back if we get that reversal signal. So at least you're still in some of it and you didn't bang the whole thing out and get shaken out. That's what you have to watch out for, okay? So just something to keep in mind there. All right, so that's the Tesla question. Now, let me go into real quick. Let me take a look at gold, because gold has also continues to get beat up, right? I mean, what is gold today? 1696. It took out 1700. It was trying to hold it. Tough hold, okay? Tough hold. But what are you going to do? This is why, again, when we were buying into this, we kept saying, don't get too big, don't get too big. So now you have to wait this out, right? I mean, is gold going to go to zero? I don't think so. But this is when things get tough and you're in a wave 4, and Bitcoin is going to do something like this too. This is what you have to be prepared for. And the only way to prepare for something like this is by strategic sizing. And yeah, what people don't like about the strategic sizing is if you're right at a support and it goes off nicely from there, you don't make a lot of money. Okay, and that's, people aren't excited by that. I understand. But this is what you're protecting against, is this, when it keeps going and it doesn't turn. Okay, now, so stocks like wheat and precious metals, which, I'm all in on, look, it's not really getting beat up that much anymore. So maybe these things will start to turn. But I'm not going to keep putting on more and more and more until gold really starts pushing some extreme prices. Now, another thing with gold, if you're in gold mining stocks, if you want to protect yourself against a move to like 1650, consider buying a put or something as insurance. So if gold keeps going, at least you're not caught and you make something back, or you're protected somewhat. But if gold turns right around, you're going to have to get out of that put because it's going to be a loss. Okay, so you can consider that as well, all right, as a defensive play. Now, one thing to keep an eye on, US 10, okay, the bonds. This is what everyone's reacting to, right? Lower bond prices mean higher yields. All of a sudden, bonds are like, cool again and this and that. And I'm a bond expert and blah, blah, blah. Okay, whatever. Bonds are boring. But the point is, this thing is pushing this low, and that means higher interest, okay? And people don't realize the Fed could be involved in this. They don't have to come right out and say it, okay? They can go into the open market and they can actually do transactions, and they don't have to make a big deal out of it, right? Powell doesn't have to come out and say, we're going to sell treasuries, we're going to sell a ton of them so that we can boost interest rates that way without saying anything. He can do it. I'm sure there's a public record of it somewhere, but they don't have to publicize it. They don't have to make a big deal out of it, and they can basically create weakness, right? That will stimulate interest rates. It's one of the tools that they have besides controlling the actual interest rate. So something to keep in mind. Watch that thing, and also the dollar index, right? Look at the dollar index. This is interesting. And this is what we're seeing. So it's trying to push a resistance. We have not seen this in a long time. Bear markets, or bearish, something that's in a bear market doesn't push resistances. So this thing may be changing, okay? We have a higher low, and it's now trying to push the resistance. This could be a change in trend of the dollar. Now, I'm not going to confirm and say, oh yeah, it's definitely a change. Not going to say that, because it can still fail here. And if it fails, we pull back, That'll give us our little boost in the stock market to get out of stuff. All right, but keep an eye on this because this is definitely a change that could be developing. If this thing just continues through and closes strong over the next few days, then we have a change. We have the higher low, we have the higher high, and now we're breaking, resistance. It's a pretty significant resistance that we have not taken out in a long time, right? As we get into that 92 area. So something to keep an eye on there. If this thing starts trending higher, then the party's over. As far as stocks and everything else, the party is over, right? And that lines up very well with all the average investors thinking that the stock market is something safe to invest in, which someone put in our chat yesterday, this interesting statistic. I thought it was the most interesting thing about how people from different age groups, how they're planning to spend their stimulus check and the percentage of them that are planning to put it into the stock market. That's a red flag, okay? If people feel that complacent or that safe that the stock market's such a sure thing. Okay, so that's my stuff. That's the stuff I wanted to cover. Let's talk about your stuff. All right, let me go through the chat here. And I thank you, everyone, for participating and giving me these great questions. Man, I've been talking for 20 minutes. I try to keep my thing, I want to try to keep it at 15 minutes or less. But all right, let's go here. So, Savi, BTC, okay, so I covered that. Well, as far as head and shoulders on Bitcoin, no, that's not a head and shoulders. No way. I mean, you can, there's no shoulder over here. So I wouldn't say that. I'm looking at more of a consolidation, more of like a triangle type situation. Okay. All right, Andre, SKT. Is SKT a coin? Let's see. No, it's probably a stock. SKT. Let's see. So Tanger factory outlets. If this is the right stock, yeah, I wouldn't touch this thing right now. Obviously, if this is not a bad price or whatever, a bad tick, it tried to push the high today, but look, it's a red candle. This thing is minus 64 cents right now after trying to push this high. Okay, that's interesting in a weak stock market, but I would leave this thing alone until there's some sort of sign of stability. Can't do anything with this. We're not at a support level. There's no double bottom. There's nothing. So good one for the radar, but that's about all I would say. Okay, CANG. Let's take a look. CANG. What is this? Okay, Kango. All right, that's interesting. Let's take a look at support and resistance. Well, first thing I see here, I'm looking at this support. Now, we pulled back pretty significantly, right? I don't like the steepness of this. I don't like this at all. When you have something this strong like that goes up like that, obviously it's herd mentality or whatever, people chasing that thing. When it gives the whole thing back, and now we have a little lower high that developed right here, and it's trying to push that low. This is not, although it's a decent location, there's nothing there that says buy this thing right now. You're getting close to a level, which is what, $7. So I would keep it on the radar for that and maybe watch for a pin bar or an inside bar or something. But I wouldn't go nuts with this thing because, for one, it's got to take out this resistance of 10.25 before it starts getting anywhere. So I would wait for some stability first, right? You don't even have a bullish candle today. That candle is red and it's closing slightly below the low of 2 days ago. So nice one for the radar though. So thanks for bringing that one up. Okay, hey, Gabriel. DJ, good to see you. HS, all right, cool. Anthony, good to see you. SVM, okay, let's take a look. SVM, another one. Silver, so I guess this is a silver related stock, just guessing by their name. Let's look back here. So it's getting beat up with the gold and silver market, right? Okay, that's cool. So this is interesting because it has the gold thing behind it, all right? Now, broader picture, and this is the same deal with gold, right? Bigger picture is bullish, but we have this recent price action which has been very tough, and the momentum has been bearish, and it's been trying to break out of the low part of the range, right? Gold looks exactly the same way. So in this area here, this is a failed low potential area, meaning, even though it looks like garbage right now, this is a high probability area for a reversal. There's no reversal there, but if one shows up, this would be a good long candidate. Of course, anything with gold, I'd be looking to buy. Well, I'm all in as far as inventory, but if any swing trade opportunities show up, I'm all for it, to take a swing trade if we get any long signals in such a location. So an inside bar, a pin bar, something, as long as we don't keep pushing lows. If we take out this low tomorrow, which is $5 on this thing, which would correspond obviously to gold and silver going lower, then I would hold off. But if we get the inside bar and this thing starts to turn, or even if you take out this high of $5.50 or 5.5, that would be a buy signal. Buy signal in a very high probability location. Okay, so this is a good candidate for a swing trade. And if you don't have any inventory and you're looking for I guess a silver related stock, this wouldn't be a bad one to buy a few shares of. Again, if you don't have any. If you've been building your inventory all along, I would not keep putting on more and more and more, because you have to protect against this market, pushing lower. Okay, so thanks for bringing that one up. Definitely putting that one on the radar. SVM. Okay, so let's see. Flow. Let's take a look, Gabriel. Flow seems to be doing its own thing. I like stocks that do their own thing. So SPX Flow. Now, all right, let's take a look at this thing. Nice general trend here, but you're in a failed high, just like we were just looking at that failed low in that silver company, right? SVM. This is a complete opposite, right? You have a resistance area and it's failing at the high. If this is the correct, I think I have the correct symbol, unless you're talking about a coin, but that's an outside bar right there. That's an outside bearish bar off of a resistance area. I wouldn't go near this thing at these prices. I wouldn't go near this. This one would be a short candidate if I were into shorting these things. So I would not, I wouldn't buy this thing. You could wait for the middle of the range at $58, right? That's one area. Middle of the range trades are usually they're 50-50, but sometimes if you get a decent signal there, they can be worthwhile. But the higher probability would be around the low part of the range in that 53 area, if it can get there. Okay, so those are the prices I'd be looking for if you're interested in a long, but I wouldn't go near this at these prices. Okay, no matter what the stock market's doing. I've seen many stocks like similar to this when the stock market was going higher and higher and higher. I won't go near these. Okay, just on that formation. So thanks for bringing that one up. Okay, AIC3. Okay, DJ, let's take a look. Start of the position in that. What is that? AIC3. That must be some kind of stock. Let's see. I'm not getting anything on that. Do I have the right symbol there? Maybe it's ALC? No. AIC3. I don't know. Is that the right symbol, DJ? I'm not getting anything for that. Let me go to all. Let's see. Anything? No, I'm not getting anything. Okay, so maybe I have the wrong symbol. All right, let's take a look at what else we have. Caleb, how can we take a look at the S&P? Oh, so SPX. All right, let's take a look at the S&P 500. So just like from before, I may have answered your questions there, Caleb, on this thing, but I wouldn't, like I said, I'm not overly bearish on this thing right now. We still have NFP tomorrow, and yeah, it's ugly, but if I see a reversal candle, I'm going to be looking for longs. Okay, at least very short term, temporary, and then once we get to that resistance, if we can get to another resistance, that's when I'd be considering the short. Okay, not at the lows, not at these lows. And anyway, if this low stays intact, if it stays intact, that's actually a higher low relative to the other lows. Even though we have some bearish activity here, right? We have these lower highs. We have to see how that plays out. But the broader trend clearly is still bullish, right, for now. So just something to keep in mind there. There's at least a likelihood of one more attempt higher because everyone thinks that buying the pullback is the right thing to do. So there may be one more pop up before, this thing just gives up. So we'll see. Okay, again, higher interest rates, a stronger dollar, and like I said, this thing's finished. Okay, for a while. I'm not expecting, when I say that, I'm not expecting a bear market, but I would expect a more of a consolidation type of market, which can linger for months, right? Depending on what the Federal Reserve, are they going to do something, what are they going to do about it? Are they going to help along with interest rates, or are they going to do something dumb like raise them? Which would, forget it, which would basically knock all the hot air out of the market. So just something to keep in mind there. That's where something like a fundamental piece of information could be helpful for the bigger picture, something like interest rates, okay? Okay, so let's see what else we got here. Flow, okay, got you. Flow is all right, I'm just skipping around the chat. Hold on, so I'll get back to Flow. Sorry about that. I'll get back to Flow. So Neo, Tesla, and Roku, DJ. So let's take a look at Neo, right? Yeah, I've been looking at these, right? The electric vehicle stocks have gotten beaten up nicely. Great locations. I mean, look at these. This is what you wait for, right? I mean, remember a few weeks ago, everyone was buying these things. These are going to go higher forever, right? And how many times did I say, don't buy into the hype, don't buy into the nonsense, don't get lured into all that stuff, because this is what you're buying up in here, right? Don't buy the highs, and this is what the risk that you're taking, right? This is what you're possibly facing when you buy the high. Now the party may be over. So this is the location, if anything, if you want to pick up some inventory, right? There's no reason to buy these at the moment, but hey, if you've been looking to buy these stocks and you want to pick up a few shares, this is it, right? This is at least one place. Now, like I've been saying, if the party is over and the dollar rallies, these things are just going to keep going. All right, so just something to keep in mind. So I wouldn't go crazy. This is not the bottom to be buying everything on. That's just something I have to be very clear on. When I say take a small bite, again, that has to be relative to your account size. A small bite may be 3 shares, or a small bite may be 50 shares, but it depends on, the size of your account. Because like I said, if we have that situation with the S&P and NASDAQ and the dollar rallies, this thing is just not going to recover. You may get your little bounces here and there, but it's just going to keep going lower and lower because there's been a lot of hot air in these things to begin with, right? Tesla is another one. Tesla is obviously it's a good company, but it can get beat up irrationally. Remember, it's not rational. People say, oh, how can they get beat up? I mean, they're doing this and they're doing that and they're worth this and they're worth that. Yeah, okay, but markets are irrational. So if people have a perception of the future that's not optimistic, or for whatever reason, the Fed says something that changes everyone's perception. And I'm not talking about the average investor. I'm talking about the large ones who move markets, like hedge funds. You'll see these things back at ridiculously low prices. So you have to factor that in. You have to keep that in mind. And the way you protect yourself is you don't get too big. You don't think, okay, I got the bottom. This is it. No, this is not it. It could go lower. Okay, like I said, there'll be some bounces here and there, but you have to control risk. Okay, that's why when it comes to inventory, doing something like buying on a timed schedule, like, okay, I'm going to buy the first of the month, I'm just going to buy $50 worth, or the 15th of the month, I'm going to buy $50 worth, no matter what the price is. If the market gets really, really beat up, and let's say by the middle of next month, Tesla's pushing 400, hey, you're buying it at 400. And it would have saved you all that trouble between here and 400, right? And you'd be getting a better price if you believe in Tesla in the future. And of course, they have a lot of potential for the future. But some of these stocks, if they get beat up, it's possible that they can first, they have to finish their beating up process, and then they can sit in a range for a number of months, maybe years. I mean, it's possible. People don't remember this, but back when I remember, I was involved with Bitcoin back when Bitcoin went to 1,000, okay, the first time. That was back in 2013. I remember that. And after it went to 1,000, it went back to $230 a coin, and it ranged between 230 and about 500 or 600 for 2 years. Okay, from about, well, maybe 2 to 3 years until 2017 when it started to break out again. But no one remembers that. Okay, so keep in mind that's always a possibility. No one could believe Bitcoin was at 1,000 for one, and no one could believe it went back to 200 very quickly. So, just something to keep in mind. Okay, so let's take a look here at DJ, UVXY, June 18, $8 or $4. Well, yeah, now, right? We were looking at that June 18, the $8 call, but we can't touch that thing now, right? I'm not going to buy it at the low. I wanted to see a pop up. In fact, because again, you're basically playing the S&P. So the time that it was cheap, right? One was Monday, back up here in this candle. That's when you have to do something like that, not on red candles. So now we wait, right? But if we get another pop up that's similar, I'll be open to it. But I may use something else. I may not use UVXY. I may find something that's a little more reasonable as far as staying in line with the market. So we'll see. Okay, so Neo, Tesla, Roku. I know I looked at Roku the other day. It was getting beat up. Let's see how much bad. It's not too bad. Let's see, what is the price? $354. It's still too high. I mean, look, it broke this support right here. And this, someone asked about a head and shoulders earlier. This is a head and shoulders. Shoulder, head, shoulder. Lower high, lower low. Okay, now the broader trend is still bullish. Okay, now this is a potential trend reversal pattern, and we're taking out supports. So in a situation like this, let's say you're interested in investing, for example, okay, interested in investing in Roku because they've had such a spectacular run. Well, again, there's no reason to buy it at this moment except if you want to buy a couple of shares. This thing, I mean, if it keeps going, right, and like I said, if the NASDAQ and S&P keep going, you're looking at support levels that we have not seen in a very long time, and it can get there. I mean, possibly 235. It's hard to believe, but it's possible, right? Someone asked about the Dow too. Here, let me pull up the Dow. Let me see here. What is it Dow 30? Is it DJ 30? Let me see. Hold on. I don't even look at the Dow. Let me see here. DJI, we can look at that. Let's see. So again, this thing is going to follow pretty much right the S&P and NASDAQ. And it may be a little more dramatic because there's only 30 stocks in it. So this is even less of a worry here. There's really nothing. Yeah, it looks minus 371 points or whatever, but look where it's fooling around. This is really not a big deal. Now, if it was taking out this low here, this area here, I'd say, okay, yeah, the party's over for sure. It's proven. But this is not proven yet, number one. So I would be still anticipating that bounce, right, in the Dow, the S&P, the NASDAQ, at least one more chance to get out of stuff and perhaps to get short. Again, that's the way I'm going with this over the next few days, Friday into early next week. NFP may have a hand in that, okay? So we have to see. Michael had a question. Okay, I'm just catching up on the chat here. Let's see. Right, DJ, that UVXY was at I think you said it was like at 280 or something, and yeah, so it's doubled. But like I said, no, what are we gonna do? Hey, Mikal, can you designate support and resistance on WPM? So, and Mikal, you had a good question in the chat room about, or you mentioned that your broker situation. I just wanted to say something. There's too many limitations with that broker. I don't know if that's something that has to do with the country you're located in, but when the broker forces you to take certain share sizes, or you have to invest a certain amount of money, that puts you at a big disadvantage because it takes a lot of flexibility away. And in these situations, especially when you're investing and building inventory, you need flexibility. You should be able to buy one share of whatever you want. As long as you have the money in your account, you should be able to buy one share of Amazon for $3,000 if you have the money in your account, okay? You should be able to buy one share of anything. So with all these limitations, it has to be $100 and blah, blah, blah. Find another broker. Really, don't waste your time with these ridiculous you know, these low grade brokers. I'm going to call that a low grade broker, because you compare that to something like Interactive Brokers. You compare that to something like some of these other brokers, like you know, even TD Ameritrade or whoever, E-Trade. Even they have, they're not the highest quality, and they still have a better situation, right? I know those are they're based in the U.S., but Interactive Brokers, for example, they're located all over the world. They're in different countries, so maybe consider them. I don't know. Anyway, but I wouldn't deal with that broker. Like I said in their chat room, the one that everyone uses from the EU is that Trading 212. I've never used them myself because I'm not in the Eurozone, but everyone seems to like them. Our European traders seem to like them. All right, so WPM. Here's the situation. Now, this is Wheaton Precious Metals, and they're going to be affected by gold. As we know, gold is acting weak right now, and this stock's gotten beaten up. But just like that SVM stock, that silver stock that I was pointing out, this is in failed low territory, meaning this location where it is right now is a high probability area for it to reverse higher. Now, you know, just because you're in the area doesn't mean it will, but the thing is, this is not a place to be selling. This is not a place to be shorting. That's for sure. All right, even if it goes slightly lower, the probability is working against you. So in this situation, we have this pin bar that closed yesterday, and we took out that high today, although we have an indecisive candle at the moment. I like this thing as a long. I mean, as a swing trade, it's harder to trade as a swing trade because it's so sensitive to gold, but it could give you a swing trade if it takes out that high. What's today's high? 36.63. But if you're interested from an investing standpoint and you're interested in levels, this would be an area to invest. This would be an area to buy some shares of Wheaton Precious Metals. And if this support breaks, then the next one you're looking at is right around here, which isn't that far away. 33.25, that area, something like that. I mean, that's what you're looking at. If it breaks that, then you're looking at this consolidation area right here, which is around $30. So again, it's not that far, it's not very far away. Those are the levels I'd be considering for some accumulation if you're not buying any right now, okay? But this is an ideal level for accumulating some shares. I'm all in on Wheaton Precious Metals, so I'm glad to see that it's hesitating at such a location. All right, so that's that one. Thanks for bringing that up. All right, so I'm just catching up on the chat here. How am I doing with time? I know I'm a little slow with these things today. Okay, so DJ, when buying a put in Wheaton Precious Metals or NEM or gold would we buy out of the money? Or that's a good question, DJ. Would we buy out of the money or in the money? Well, I mean, at this point, I would consider, well, let's take a look at gold, right? Because this is really a function of gold. Let's go back to gold and would XAU, USD. So buying a put in this situation, well, if you're buying in the money, obviously it's going to cost you more if this thing turns around right away, okay? Now, at this moment, while it is in a location to turn around, probability favors the reversal, okay? It favors the reversal. So buying in the money, it's probably more expensive than you need. I would say out of the money, because it's going to be cheaper and it'll protect you if this thing keeps going lower. And if it turns right away in the next few days, if this thing turns, then your loss will be even smaller when you get out of it because it's out of the money, right? The delta is also going to be lower on them. So that's the way I would think of it, okay? While in the money, the delta is going to be higher. In the money is almost like one-to-one with the stock. And these things are they're in a location to turn. I can see if we were at the highs or in the middle, but we're at the lows. All right, so that's the rationale I would have for that. So good question. Thanks for bringing that one up. Only asking above question because we have to take delivery. Would you rather just sell and take money than owning 100? All right, that's a good question. So would you rather just sell and take money than owning 100 more Wheaton Precious Metals? I mean, in this situation, I would rather if I didn't have a choice, or if I had a choice, I would rather own more, to be honest, because you're buying into something that, again, is hated right now. It's usually where the opportunity is. I mean, yeah, sure, it can go lower, right? And we have to control for risk. So you have to decide, do you want the extra exposure? And if you don't, then, then just take the money and whatever, just close out that portion or whatever you're doing with that there, right? Well, I guess what you're short a put or something? I'm just a little confused as to your question. But yeah, I wouldn't, if you're overexposed or you have too much, I wouldn't keep putting on more and more and more. It's good if you don't have any, okay, but I know you have some. So maybe you can clarify that question. Okay, Anthony, PLTR. So this is Palantir, one of these stocks that has gotten beaten up just like the rest of them. Nice beating up over here, lower high. Okay, let's take a look at the support level. So we have a broader trend that's bullish, right? It's pulled back to it. So great location. There are a lot of stocks that are in a great location. All right, look at Square, for example. Great location, but no reason to buy just yet. Great to buy some for investment, but like I keep saying, have to take small bites, because if this party is over, these things are going to keep going, and a lot of people are going to, all these easy profits that everyone's made over the recent 6 months because the stock market is a safe place to invest, they're all going to give it back. Okay, so you don't want to get caught up in that. So a lot of stocks are going to be attractive here, which is fine for a swing trade. As far as the price action goes, I mean, it's holding up considering how, the ugliness of the broader market. It's not bad. I mean, you have this little mini consolidation that's developing here off the support. I like to see that because it's some sign of stability. It's not a single candle. And what are the highs? 25.5. So you figure, okay, and this thing right now is at 24.48, and it's actually up 90 cents today. Okay, so those are all good things. This would be a good candidate for a swing trade. You can measure your risk from 23, so 23.5. So you figure if you're buying it at 25.5, you're risking about $2, and there's plenty of opportunity here to make more than $2, okay, if this thing pops up a bit. Now, again, you're going to need the market to cooperate, obviously, but this thing is acting relatively strong to the market. So those are all good signs as far as a swing trade candidate. Thing is, I would be conservative with those targets. Okay, I wouldn't sit there and say, okay, I'm going to hold it all the way up to 50, because if the market turns, right, or the market doesn't get very far over the next couple of weeks, this thing's probably not going to be testing those highs. So you want to put your targets somewhere in this area, right, to be reducing your risk or taking profits or whatever. All right, so thank you for bringing that one up. That's a good one. I know Andrew's been talking a lot about that one. He's been anxious to get back into it. I can see why. All right, ADVM. What do you think about a long from here? Let's take a look. ADVM. All right. Let's take a look at first. Let's take a look at the broader trend. I see here a lower high. This area obviously is a lower high. All right. So when it comes to longs, I don't like that because the trend may be bearish, right? Where there's a lower high relative to other highs, a lower low is likely. Now, your near support levels, what is this level here? $10, just over $10, $10.50. It's trying to hold that, but there are many, so we just looked at Palantir compared to something like this. Palantir had a much better looking chart, relatively speaking, because its consolidation could be considered a lot higher or low. All I see here are lower highs, right? This is a lower high right here, and this is probably more likely to make a lower low. So I don't like it. I don't like this at all. And on top of that, there's no reason to buy this thing. This is a doji at the moment, and it's not a pin bar. It's a potential location, but you have a lot working against it. I'd rather find a better looking chart for a swing trade long. So thank you for bringing that one up. And that's a good comparison after PLTR, Palantir. All right, INO, I-N-O. So this one, I guess it's no longer in the news spotlight, right, like it used to be. So you're getting back to this support level here, basically that 850 area, right? Okay, that's cool. You're in a range. Your range high is here. Here, let me just put a level at that range high. 15, around 15 and a half, and you're near the range low right now. Obviously, this thing has not been trending for a number of months, so I wouldn't really go by that, but you do have the range low. Of that, this candle today, so this candle, there's no buy signal there, there's nothing there, but this could turn into a reversal. If you get a green candle close tomorrow and it takes out this high of basically 979, you're looking at a break of $10. That might be a good location to look for an aggressive long. I mean, this thing, you're playing the range on this one because there's really no trend. So you're looking at possibly $12 or $13 target, right? That area, you're looking for the middle, for this thing to retest the middle rather than the high of 15. So that's what I'd look for on something like that. But again, I'd wait for a better candle at least, and then measure risk off of tomorrow's candle. Right? If tomorrow's candle goes slightly lower, I would hold off until you can start at least taking out the previous day's high. That may happen, that may take place next week sometime. So definitely good one on the radar. So I like that. I'd keep that one on the radar. I like that SVM. Keep that one on the radar. Okay, cool. All right, so let's see what else we got here. All right, so now I'm just catching up on the chat here. Andre, okay, no problem. Gabriel, we need some sort of bell on this chat. A bell. Yeah, we need something. Okay, hold on. No, okay. Oh, so I'm going to go back to Flow. Yeah, Flow USD. So that's where I am now on the chat. So here's Flow. This is what you meant by doing its own thing. So I talked about that other thing, Flow, for like 3 hours, and no one wanted to know about it. So let's see, Flow USD. See, are there any better charts out there? How about this one from TradingView? No, that's not that much better. But all right, look, we'll work with this. So here's the thing. Yes, it's been doing its own thing. That's a good thing in light of what Bitcoin is doing. But you can't buy this. You can't buy this now. You're chasing into the herd mentality, and imagine all these people that bought into this tail here. Now they're caught in that, and I'd be looking for the pullback. Okay, so the first level I'd be looking for on something like this. I mean, look, you can't argue the momentum is bullish, right? You can't argue with that, but maybe a test of 24, 25 area would be an ideal place to look for the next leg higher if it could pull back to there and turn. Now keep in mind, a lot of these things, they get all excited and then the party's over, right? Now let's just, like, for example, when we take a look at something like Link, right? So look how exciting Link was, right? All exciting, everyone's excited. And then when it pulls back, everyone jumps back in because, hey, that's the pullback. And then look, the party is over, okay? So just something to keep in mind with something like Flow. Are there any other examples? Well, I think BAT is a good example too. Look, I mean, something like this. It gets all vertical, everyone gets excited, and then, so you got to be careful with that pullback. But is it worth a try on Flow? Yeah, I mean, it's worth a try, okay? I like the, what's it, USD, oh, so USDT. Right, all those charts are pretty much the same. Yeah, so I'd wait for the pullback on something like that. Okay, something like this too. If you're in it, and you're in it from a low price, hopefully you're locking in profits. This is a situation where you definitely want to lock something in. Now, I would say that if it was here. I would say that if it was here. Whenever I see something go vertical, I'll say it at every price. No matter where it is, you should be locking something in because you don't know where that high, you don't know when this high is going to unfold. So, people look back, I should have held it, I would have made more money. That's greed speaking. And that same greed is what's going to keep you in something that pulls all the way back and then you lose a ton of money because, you're looking for the big home run. Okay, cool. So, got you there. Netta, what do you think of DAR? Is DAR a coin? I'm gonna start out with a coin first, just in case I don't. Let's see, DAR. or maybe it's a stock. Okay, so if it's a coin, by the way, just mention it, and if you mention it in the chat, put USD after it or something, so I don't make another flow mistake. All right, darling ingredients. Ah, all right. Well, here's the thing. You have a head and shoulders developing. You are at the shoulder resistance right here. So it's trying, it's up today a few points, what, $1.74, right? Market's closing in a few minutes. All right, that's cool, but I wouldn't buy it at these prices. You know, I mean, yes, it's acting relatively strong, but I'd rather buy something that's coming off of a support, not buy into a resistance, because even if the stock market rallies tomorrow, this thing may just get stuck here. So I'd rather see a pullback. 62, maybe that 62.25 area. That's the area I'd be looking for as far as a swing trade goes. Okay, so thanks for that. Okay, yeah. Gabriel, be specific next time. If it's a coin, right coin pair. Right, okay, you're right, happy. So yeah, again, if it's a coin, because again, I'm behind on this chat. I'm just trying to catch up. All right, DJ, AI. Is AI, let's see, I'm guessing, ooh, AI. Is that right? Is that the right one? Man. So, yeah, this is that example of greed that I just mentioned. This is what happens when you hold on thinking, yeah, this thing is going to go to a new high. And then you open it up in a few days and it's, what? It's all the way back at $84? Man, that's crazy. I wouldn't touch this thing right now. It's at a potential support level. There's not much price history on this. There's no reversal here. I'd wait for stability, if anything. This momentum is pretty steep. So this is very easy to get caught in something that's going the wrong way. Like, for example, look at this pin bar over here. So if I saw that and it looked like this, okay, if it looked like this, I'd be like, oh, okay, that's worth giving it a try, right? Got a pin bar, pull back, some support over here, okay, blah, blah, blah. And look, it would have tapped you into the trade because it went higher than the pin bar. And then if you didn't have a stop on that, you're caught in it. So just something to keep in mind, right? A pin bar is no guarantee that it's going to turn, but at least it's a starting point. So thanks for bringing that one up. We need some sort of bell, right? Okay, I'm back to that. AI is a ticker. Okay, C3AI is a name. All right, Flow USD. All right, I'm catching up here. Would you trade SH or SQQQ? All right, so SH, Pro Shares Trust, is a short S&P 500. It's interesting. Or SQQQ. Let's take a look. I mean, they're probably going to look similar. Well, I mean, I like this SQQQ chart better. Look at this nice higher low. So that's nice. It's just this chart seems to be a little bit more complete. The other one, SH, I mean, it just looks like there's less volume or something here. I just don't like this sporadic looking chart. But that's just a personal preference. There's really not much difference between the two. So they both got this little bottom. Here's the thing with these, if you notice, they look similar to that VIX, the UVXY chart. They look kind of similar, right? Which means one thing. You cannot rely on these charts for signals because they're a derivative of something else. You have to look at the parent chart, right? So in this case, you know, it would be the S&P, so SPX USD. And you have to make your decisions based on this, not on the SH or SQQQ chart. So to answer your question, I would probably pick SQQQ. And obviously going long one of those means this thing's a short. So you have to think an opposite, meaning just like buying the UVXY calls, I would not buy the SQQQ or the SH until we are, you know, here pushing a resistance and then anticipating the next leg lower, something like that. All right, we have to see. Again, this is a tricky situation. Look how we closed. Minus 46 points, right, on the S&P at 37.72. I mean, look, it's not on the low. It didn't close on the low. It's not great, but it's not horrible either. It's really not that bad. I wouldn't make a big deal out of this, right? I'm sure the news outlets are, but, you know, because no one likes to see a red market because we haven't really seen one in such a long time. Not a real one anyway. So, yeah, I don't know. I would be suspect of the bounce, at least a temporary one, perhaps tomorrow and Monday. Okay, but that could be the opportunity for the short. You know what would be the ideal opportunity? Is if this thing bounces and gives us a higher high, like something ridiculous that no one sees coming or expects, and gives us, like, this would be the shoulder over here, right? This formation right over here would be the shoulder, and then we'd have a head up here. That would be ideal to go short if we can get something like that. It would be aggressive, but that would be where probability would be our best. So that's a great time to keep SH, SQQQ, UVXY, all those. That's the time to consider positions in those. It's all the same trade. All right, cool. Gabriel, trading 212 closed subscriptions at the moment. Too much demand. Wait, are you serious, Gabriel? It must be all coming from our members, because all of our EU people are all in trading 212. I can't believe they closed their subscriptions. That's ridiculous. Unbelievable. Okay. I don't know. I don't know anything about them. You know, I don't use them myself. We don't get any kind of affiliate payment if I recommend them, because we're not, we don't have any kind of affiliate relationship with them. But they owe us some money because we bring a lot of business to them. Anyway, all right. So let's see what else we got here. Interactive brokers is quite global indeed. But Gabriel, as far as brokers go, interactive brokers, they are global, but they are typically they're for more experienced investors, and like their support isn't the greatest if you're new. Okay, so maybe like a TD Ameritrade might be appropriate. I already have WPM, NEM, gold, but if I buy the put, and let's say I get assigned, that will put me over 10% in gold. If you buy the put, well, if you're buying a put, and you mean selling a put, you'd be assigned, right? If you're buying the put, then you can take delivery, or you can sell shares. You're buying the right to sell shares if you own the put, and you want to activate that, right? You want to exercise that right, then you would be selling 100 shares of something if you own the put. So put you over 10% in gold. So DJ, I don't know if that allocation is a little uncomfortable for you, then I wouldn't do it. But that's only a question that you can answer. Masked Mage, EMC short squeeze right now. Let's see. EMC. Ooh, look at that. Okay, that's interesting. So I'm not obviously Energica Motor Company. Look at this support level at $1.71. Nice push. I mean, obviously there's either some news in this or something. Okay, can't chase this now. When you see these, if you're a reactive trader or you're not familiar, you're kind of new, and you're like, oh, it's going higher, I'll buy it, right? Not a good time to buy. You don't want to buy these. Like I just showed you with some other examples, you're buying, the risk you're taking is very high in these situations. And at some point, it will come back and bite you. So when you see something like this, okay, cool. Put it on the radar and wait for a pullback, right? That's the more effective behavior, which would put you around 189 or somewhere in those 180s. Something to keep in mind. Thanks for bringing that one up. That's interesting. Okay. Yes, this is the one. I just started a position, bought one share. Okay. They're all the same. VIX, UVXY, right. Yeah. HK. Does anyone use eToro instead of trading 212? That's a good question. eToro, I was just checking them out not too long ago because I had some questions about them too, and I'm not very familiar with them. I know they're located in Cyprus and that they're an Israeli company, and they have that trade following set up. But, and they trade a variety of instruments. I don't know exactly how they are with that stuff. But, and I haven't really gotten much feedback on them. Again, I don't use them. So that's a good question. Good question for our chat room too, HK. I don't want to tie up $4,000 on a stock. Would rather just buy physical gold personally. Okay, and that's a personal preference, DJ. The one nice thing about physical is you're not using leverage, which, as we know, leverage can get you into a lot of trouble. as we're seeing with something like the CFD. I'm sure a lot of people bought into that XAU and they bought a ton of it thinking, oh yeah, I'm buying the bottom of gold at 1760 and here we are at 1698, right? A lot of people getting margined out of positions in that situation. It's all paper. So yeah, that's where the advantage to physical comes in. But you have to understand the physical market. You know, I'm sure you have some experience. Someone that's brand new shouldn't trade physical or should not really get into physical, because you really should familiarize yourself with it first and understand the ins and outs of that business and how people can scam you in the physical world. You know, there's a lot of unscrupulous dealers out there that will take advantage of you, right? When you go to a pawn shop, for example, they're not there to help you out, right? They're not there to do you any favors. They're taking advantage of desperate people that are trying to, you know, they need money right now and they'll unload it at any price. And the pawn shop owner knows that, right? So they're taking advantage of motivated people that are motivated to sell. Anyway, so you can find that. You have to be careful in the physical world with that stuff. But I'm not telling you, DJ, because I'm sure you know. But anyone that's new and like, oh, I should get involved in physical. No, you're better off. If you're brand new, stocks are probably the best choice for getting exposure to the gold or silver market, because you could buy one share and most of these stocks are regulated. You can, if you want to look up how their business model is doing or whatever, it's public information. So you can at least see what they're doing, and the likelihood of getting scammed is a lot lower. Okay, Gabriel, I don't know eToro well, aside feel like they're harassing me with their ad. Yeah, I know, they're very aggressive with their ads, Gabriel. Very aggressive. DGiro, I've heard of DGiro, but I think DGiro is one of those brokers that puts limitations on things. Again, I don't know. You guys, it's good that you guys are doing your research on these brokers. That's the first thing you should do. You know, if you're looking for a broker to invest with and that kind of stuff, look at the kind of limitations that they have. Look at their margin requirements, because brokers may have slightly different margin requirements, especially non-US brokers. You know, so you should be familiar with that stuff. A lot of people aren't. They just want to put the money in an account and start throwing it at the market right away. And that's usually not the way to do it. Take your time. Markets are not going anywhere. Okay? They'll be here after you've done your research, and there'll be more opportunities at that time. All right, so I think I've answered everyone's questions. And I'm only just over an hour into this. That's not too bad. And I caught up with the chat. So real quick, again, if you're new to GreenBridge, please make sure you press the like button if you like these videos that I do, and register for the channel here so you get an email notification every time I stream. And if you, if you want to know more about GreenBridge, just click on the show more description portion of this video, and all the links and all the information is there. We have a 7-day free trial, and we have a free chat room and a paid chat room and all that stuff, so you can check that out. All right, cool. Do I have any other questions? DGiro says no if you say you were... See what I mean with these brokers? I mean, you know, these European brokers are funky that way. I mean, they have all these strange rules. And I don't know what their deal is. But we don't deal with that stuff here in the U.S. I mean, Interactive Brokers and some of these other ones, I have to say, I mean, they may not be the most supportive at times, but when it comes to all that regulatory stuff, I mean, they're pretty tame, you know, as far as letting you do what you have to do. Okay, cool. All right, everyone, so I hope I answered everyone's questions. I want to thank you again for all your great participation and all the great stuff here I see in the chat. Again, just be careful. Tomorrow's NFP at 8:30 a.m. Eastern Time. Be aware of it. See how it comes out. Don't overreact. Yeah, it's tough, Gabriel. I understand. Just look, don't overreact. Remember, it's human nature to react to information that we see. Right? Just think about this for a moment, and then I'm going to wrap this up. You know, as people, we're conditioned to respond to a physical environment. Think about this for a moment, right? So we make decisions generally based on our senses, you know, things that we see, things that we touch, things that we hear, things that we taste, okay, things that we feel. We make decisions. That's how we are. That's what makes us human. The market is not a physical environment, Okay, the market is an abstract, random environment. So our senses are not exactly in tune or aligned to do things in a way that would be beneficial, okay, to us because of the behavior, the random behavior of the market, right? So that's where overreacting comes in. And when you overreact as a group, because we're all human, we all do this, we all pretty much do the same things when we see the same things, right? So for example, if we smell something that smells nice, we say, oh, that smells nice, I want to buy that fragrance. Or we see something that looks good, oh, I want that, right? Because that's why advertisers do what they do. They put something nice and we want it. Okay, the market doesn't work that way. So when we're looking at market information, we have to separate ourselves from that type of behavior. That's how you separate yourself from the herd. The herd all behaves the same way based on the information that's in front of them. They react to stuff that's obvious because in the physical world, that is what works, but not in the abstract world. So if it's obvious and everyone else is doing it, it's probably a bad idea. Okay? Less is more in this game. More is not better. Just a couple of things I want to let you guys know. All right, cool. So I'm going to leave you guys with that. All right, everyone. So enjoy the rest of your day, and I will see you tomorrow in the chat. Thank you so much for watching.